right now, the number one topic in the market is this a bear market? Are we still going to have a bounce back? When is the Q4 going to deliver some great result for us? It's not impossible to have another all-time high in Feb. The people sitting at the table, they are different now. So their behavior impacts what we will say in crypto. AI bubble does become a major catalyst of traditional finance market losing confidence that no risk on asset would outperform, and BTC would be included as well.
Bitcoin wipes out more than $400 billion in a week. This past month has seen the biggest losses in crypto in terms of market cap in history. Bitcoin is now firmly below its year-to-date gain territory, and we're still well below $100,000. Even as we're speaking today on the 26th of November, Bitcoin's up about over 3%, but it's still underperforming stocks. We're talking to somebody who follows data very, very closely. She is Alice Liu, head of research at CoinMarketCap. Welcome to the show, Alice. Good to see you.
Great to see you. Thanks for having me here.
CoinMarketCap is perhaps one of the most definitive resources for data and analytics and live prices for the entire crypto space. Everyone uses it every day, so I'm very happy to have you on the show. Tell us about the key trends that you're paying attention to right now that are moving crypto markets. In other words, why have we seen such a huge outflow of capital outside of crypto, or out of crypto rather, in the last 4 to 6 weeks?
Yeah, sure. Starting from last week was the darkest part of the fear and greed sentiment in the market. We did have the CMC Crypto Fear and Greed Index hit as low as 10. Right now, as we speak, it did bounce back to 15. But 10 was the lowest we've ever recorded since we launched the index in 2023. So right now, the number one topic in the market is this a bear market? Are we still going to have a bounce back? When is the Q4 going to deliver some great result for us? So one interesting thing, which is the CMC Crypto Fear and Greed Index, it never stays below 15 for more than 7 days. And this time around, it is the same pattern. So we did say yesterday, the index level bounced back, and the market seems to be having a bit of a V-shaped recovery in terms of the sentiment alone. And as we speak, David, I'm so happy because we finally have BTC rushing above 90K. Right now, it's $90,052 for us at the moment. We've been waiting for this for a long time. Now, that was last week, but you were right. For the past 4 to 6 weeks, the market has been seeing exceptional amount of outflows. US BTC ETFs alone had about $4 billion USD outflows in November, and that has been the highest has ever recorded on a monthly basis. And also for us as an industry, I generally look at the trend in 3 layers. Number one, macro market, it sets the direction of where we're going. Number 2, the flows, talking about ETF flows, talking about institutional flows, MicroStrategy redeems, etc. That sets the speed of going to that direction. And the last part, I look at on-chain data. On-chain data will then tell me how sustainable that speed is. And for the past 4 to 6 weeks, because of the deleveraging in the market, what we saw post 11th of October, the massive liquidation in the market, it seems to have then experienced great outflows. The market has sort of cleared up the leverage at the moment. A lot of the capitals are on the sideline waiting, and BTC dominance dropped back to 58%. And I would say, based on the most recent fear and greed and the market cap and trading volume, I can say that the sentiment has calmed down a little bit, and we are ready for another takeoff if the market is set up. Right.
Let me just open up CoinMarketCap. So this is the homepage. So maybe walk us through what people should be doing and going to first when evaluating the current sentiment in the market. So we talked about fear and greed. The altcoin season indicator is pretty interesting. Right now, it's firmly still in Bitcoin season. And as you know, most altcoins got wiped out over the last month. And then average crypto RSI. How do we use this page, Alice?
Yeah, sure. So you're right. I'll start with fear and greed, but also look at the, if you go onto the second tab, which says dashboard, and under the markets tab, you will have market overview, the first one. If you click on it, it brings all the details here. This is how I start my morning. I look at the fear and greed first to monitor the market sentiment, and I look at the total market cap and volume. Volume is very important. Right now, what we are seeing is a slight drying up in liquidity, and I would pay attention to that. And you're right. I then look at the altcoin season, but click into the chart because that is interesting to observe. Yes, I know it's been very bad for the past 90 days, but if you look at some of the pockets, nuggets in crypto market is still delivering great results. What you're saying, the altcoin season, how we measure it is by tracking the top 100 largest coins on CMC and their performance over the past 90 days. If 75% of them are outperforming BTC, then we are firmly in an altcoin season. But right now we are in BTC season. Even in a market like this, we still have amazing growth, such as Aster, such as if you scroll down a little bit, you'll see like some of the names delivering great results for the past 90 days. Yes, every single one of this has a narrative behind it. Zcash, that tags into the privacy narrative that we were saying. It had an amazing up run for the past few months. Tagging to privacy, it's Zcash, Monero. It is Stash, a few other tokens as well. And Aster, it leads the perp DEXs narrative in the market. But yes, you saw all this red. Hopefully we will have another comeback of the market very soon.
Well, this is 55%, 80% loss. When you look at the reds and then when you look at the greens, so the altcoins that gained versus the altcoins that got wiped out, I know every single altcoin has its own narrative, especially the ones that gained, but is there a constant pattern here? Like, coins that did well in a Bitcoin season versus coins that did not do well?
For the previous market cycles, yes, but right now it's really hard to predict. What we generally see is a narrative trending in the market for no more than 14 days. 14 days is the amount of attention you would get in crypto as a trending narrative. And privacy has been quite an exception for the past few weeks, mostly because the market has been starved of new narratives, topics to grab onto. So this, together with X402 payment theme, seems to be a very big trend. But also at the same time, what I'm really looking at right now is the great buying opportunity for some quality projects. There are a few things I personally think will be great growth drivers in 2026 when the market comes back. Number one is still going to be perp DEXs. So we're still talking about Aster, talking about Hyperliquid, etc. A few other perp DEXs as well. So what we're really seeing is the fundamental use cases of them and the revenue, trade volume, open interest that these platforms generate. So you can now use CMC AI below the price chart. You click on the analysis there. It actually gives you the live AI generated analysis of why the token is having the price reaction
cool.
it is
why
having.
Is Astra's price down today?
It is very accurate in the sense that it's taking data from not just the trade volume, the price volume, but also from on-chain stats, as well as the RSS feeds of the news and the community comments.
The global financial system is rapidly moving on-chain, and today's sponsor, Cool Wallet, is a name worth watching. Cool Wallet builds next-generation cold wallets designed for a world where real-world assets, payments, and savings live on the blockchain. Their flagship credit card-sized hardware wallets combine CCEAL6 Plus secure element protection, mobile-first usability, and a unique 2+1 factor authentication system that requires your phone, your biometric ID, and your card to approve every single transaction. So here's a Cool Wallet Go card. It's an easy-to-use, on-the-go, card-sized hard drive that stores your private keys and literally fits inside your wallet or purse. Activating the card is simple. It takes about 30 seconds. All you have to do is download the Cool Wallet app and follow the on-screen prompts. Let me show you now. Activating a new wallet is very simple. Simply go on the app, click on Add Wallet, and it's going to ask me if I have a card. Yes, I have a card. Every time you order a Cool Wallet Go product and package, it comes with 2 cards, primary and backup. It's going to ask me which card type, in this case, Cool Wallet Go. Notice how it pairs with NFC. Click on that, create a new wallet, activate primary card. Either of these cards can be your primary card. Simply scan the card by tapping it to the back of your phone. Success. And it's important to know that you need the primary and backup cards to be able to fully activate the entire wallet. So both of them have to be active. Now create a new pairing password. This is important for when you need to recover your wallet in case your cards are ever lost. Generate by card. It's going to ask me to generate a private key. Tap my primary card, start setup. Now it's pairing my private key to the primary card. Now that both cards are paired with the private keys and activated, the wallet is ready to go. As you can see, it's a brand new wallet, so it has no funds in there. Every time you put money in there and you want to transfer funds to another wallet like this, for example, it will require you to scan and tap the card to the back of your phone as a security precaution. That's just one of the benefits of using Cool Wallet. It's very secure. Remember how I said to remember your pairing password? Well, if ever you lose the card, go to settings, go down, replace primary card, and it's going to ask you to enter your pairing password. That will start the process. So once you've activated the wallet, you can use the app to swap to other tokens and cryptos. All you have to do is first click on the manage icon on the app, add the crypto that you want, then go to the home page and click on swap, and the crypto you just added should be there. You can also send cryptos to another wallet, making peer-to-peer transactions instantaneous and frictionless. There's also an earn function that allows you to stake your holdings to generate yield. Cool Wallet also recently launched a breakthrough fiat on-ramp feature. So instead of going to a centralized exchange first, you can on-ramp directly to Cool Wallet. Users can create a bank account under their name and a fiat currency of their choosing that's available, wire the funds in, and have those dollars automatically converted into a stablecoin that's on-chain, directly into your wallet within minutes. With support for 40 plus mainnets, staking, lending, NFTs, and advanced clear signing protections against phishing and malicious contracts, Cool Wallet is positioning self-custody for mass adoption. To learn more, go to the link down below or scan the QR code here. And if you do use my code, you'll get a 5% off on your first purchase. I'd also encourage you to check out my interview with Cool Wallet CEO Michael O for more details on the product and why we need self-custody today. And he also explains in great detail how the security functions work. Link also down below.
Can I go to volume and see positioning, sort of like a CME commitment of traders report, traders long positions or short positions? Are there any such thing?
We have the liquidation map, but it's in a separate tab. So
Okay.
it would be, not directly on the coin detail page because this is still very much, the spot focused, the page for you. But then we would have the liquidation details there as well.
Well, right now, how would you evaluate positioning? Our traders, most of the volume, is it selling or buying? Well, I know in the last 30 minutes it's buying, but overall in the last week or so, positioning and sentiment, how would you evaluate it? Still in fear territory right now?
The data is telling me 15, which is still extreme fear, but I saw the V shape come back already. And based on the long short ratio, let me check now. I know you said don't check the last 30 minutes, but we had some material change for the last 30 minutes.
No, 30 minutes is fine. 29
Okay.
minutes is also fine. Whatever time period you want, whatever is important for you. We want to know what's pumping right now and what's dumping as well. And
sure. So as we speak for the past hour or so, that's the data I have. The long short position seems to be, we are 57% bullish long on the market.
Tell us about some of the macro variables, the trends that you're following. You mentioned in the beginning that right now is very much a macro-driven narrative for crypto. And a lot of people would agree. And a lot of people wonder, well, even though stocks are still in a bull market technically, why are Bitcoin and other cryptos not outperforming stocks?
Yeah, exactly. So this is what I love about your audience base. I think because people have such deep knowledge in finance and just in global markets in general. So we do save the dispersion of, what is happening in crypto versus what is happening in traditional markets. So from my point of view, there are two unique idiosyncratic risks to crypto. Number one is liquidity, because December is the people sitting at the table, they are different now. What I mean by that is the amount of holders from the institutional side, ETF holders and digital asset treasury holders, they have now account for a large proportion of the volume and of the holdings in crypto. So their behavior impacts what we will say in crypto. And what we are saying is December is generally the time for them to rebalance their portfolios, right? We would have some tax related trading activities as well. So that is one of the reasons why we saw the large pullout of the capital in the market for the past few weeks as well. And December is generally very thin liquidity for crypto, and that just enhanced that character by now having TradFi sitting at the table. So number two of crypto native risk here is the halving cycle. I know people have been talking about it. 4-year halving cycle, it normally happens around past like the 564 days to 594 days, around that range post the halving. And then when it takes us to this market cycle, is coming right now about November time, December time. So for some people who believe in halving cycle, they would be doing their trade based on this position as well. So those are the two unique characters of crypto for what it is.
Well, let's take a look at the Bitcoin price chart. So it seems to be following what is done in the past, meaning we have a top, a double top, and then a correction, stabilize around the previous bull cycle top, and then grind up higher in a few years. It's a very predictable cycle when you look at how it's performed in the past. However, some people make an argument that the Bitcoin 4-year cycle is pretty much over. It's not really following what it's done before. Although if you look at it, it kind of still is. Maybe I think people don't want to admit that maybe this was the cycle top. So if you were to follow the 4-year cycle, I think you could make the argument that we're not coming back to above $120,000 for Bitcoin. But anyway, I'll let you do your analysis and perhaps what you've heard from your associates as well.
Yeah, so what we are generally looking at the moment is actually relying on traditional finance to give us some macro indication, in a sense that what we are saying, because of the government shutdown for the past, it's for over a month, and we're missing quite a few key economic data. So that's why investors are parking their capital on the side. And as December comes in and we have more data transparency there, we generally anticipate January time, maybe around January, Fed would make a decision and give us potentially additional injection of liquidity in the market, as well as, interest rate decisions on that. And February is going to be the time where we are likely to see a comeback of the market again.
Okay.
It's not impossible to have another all-time high in Feb.
All right. Let's talk about the ETFs. Now, the ETFs were a huge boost for Bitcoin, but not so much for Ethereum. And now there's speculation as to which altcoin could be getting an ETF next. How significant are ETF inflows actually for the underlying token?
Yeah, so there are two things. Number one is the approval of the ETF themselves. Number two is the actual AUM flying in. So number one, we recently had Solana, XRP, etc. ETF approved, but we didn't really see the price reacting to this, and it was very short-lived optimism. And one of the main reasons is that there is just not enough money coming in. And plus, these tokens have been having quite significant market cap already. So for them to have a meaningful movement is going to require a lot of capital. And that's the same case when it comes to Ethereum as well. I think generally speaking, for TradFi investors, they still have the mentality of BTC is the digital gold, Ethereum is the digital oil, in a sense that it is a smart contract platform. But when it comes to more crypto native communities, what we have been debating, for example, this week with the launch of Monad, which is the modular L1s, and then we've been seeing all the different other L1s, for example, BNB chain, Solana, having great performance when the meme season came around, right? And then we also have other, for example, Hyperliquid itself, as well as some other traditional financial institutions. They're creating their own L1s to accommodate more RWA related things. So within crypto native communities, we do see the competition of other fundamental infrastructures competing against Ethereum. So there has been a bit of sort of hesitance on the capital inflows into Ethereum side.
I've read and also talked to people who have told me about the Bitcoin miner pivot to AI. It doesn't happen to everybody, but a lot of Bitcoin miners, and maybe even the big ones, have been reported to be selling Bitcoin in order to fund a transition into basically becoming part-time AI data centers. Can you comment on this trend and whether or not that's contributing to a big sell-off?
So miners themselves, they've been living the market for a long time, like multiple different cycles. And part of this, how they manage their holdings, their BTC holdings, as well as how they manage their computing resources, like those are part of their corporate strategy in a sense. So I wouldn't say that as a turning signal of the market in general, because BTC mining is still a profitable business when it comes to, like, when you look at the whole market cycle picture, if you zoom out a little bit. So I guess for the miners themselves, it is going to be just a tactical decision during certain period in the market just to help with their own corporate strategies.
Right. Now, tell us about the emergence of stablecoins and, well, not emergence, they've emerged a while ago, but the mass adoption of stablecoins now following the implementation and enaction of the Genius Act early in the summer, and whether or not that's maybe impacting liquidity in other areas of the sector.
Yeah, sure. So stablecoins have seen such a growth in as a sector in terms of AUM growth, which we call TVL, as well as the product growth. Because what the Genius Act really did for this industry is to encourage the separation of yield-bearing stablecoins versus that of just purely, asset-backed. So what we saw right now, as we speak, Tether, they're having 184.5 billion USD market cap, and followed by a few other large leaders. But within the stablecoin sector for the past few months, we saw the growing trend of yield-bearing stablecoins. And that is such a bless and curse at the same time. Bless in a sense that we saw the aggregators in the middle, curators, if you like to call them, to deploy all the DeFi strategies to provide great APR or APY for stablecoin users by just getting different yield strategies onto different chains by different projects. But also at the same time, that was partially one of the reasons that gave us the 11th of October liquidation. There have been some arguments on the exact reason for that, the starting point of that. But definitely USDE was one of the core part of that liquidation, the leveraging we saw in the market.
I suppose they also eventually will have huge impact on the treasury market. The Genius Act basically suggests, or maybe even to some extent enforces, that future stablecoin issuers will have to be backed by US treasuries. Now imagine these treasury companies or stablecoin companies reversing that flow. In other words, dumping treasuries onto the market. That would have profound impact on the global financial markets.
Yeah, so I guess you're right, because if people are redeeming their stablecoins out of the market, that would happen. But as we saw since the approval of BTC ETFs, to be honest, and then we just saw such a massive growth of stablecoin as a sector altogether, the TVL continues to grow. Let me get the full data charts on this so I can have the exact number to share with you guys. But I can't share it on this because I have this on my phone, but I'll send you the chart and we can show people that later. But the point I want to make is today there has been a news covered about Tether and how S&P downgrading Tether because for the risk of let me get a stable coin. Yeah, so stablecoin as a sector is 114.5 billion USD, and that keeps on growing. Like the line chart I've seen has been like continuously upward trending. So yeah, coming back to this now, because stablecoin is becoming such an important building stone, a foundation for this industry. Now people are looking into the details here, and Tether being the biggest one. So Tether's USDT stability score was cut to weak level by S&P because quoting that the reserves can't absorb Bitcoin drops, as you mentioned there. So I guess the thing here is the treasury holdings within those are adjusted to the level of demand of stablecoins. As as an industry, as we grow, and what I mentioned that potentially we have another bull market come back in February, I don't think the demand on a stablecoin will drop sharply as it goes like this. And also bear in mind, the end of the year BTC sale is we see that now with the ETF approval. Last year it was the same. It's just a temporary periodic portfolio rebalancing.
But do you think stablecoins are inherently anti-Bitcoin in the sense that flows will go into one and not into another, or are they completely separate asset classes at this point?
Stablecoins to crypto native group, stablecoin is our dry powder. Like that's how we park our dry powder. At the same time, stablecoins, they are a building block of DeFi. So there are yield strategies on top, etc. It is liquidity, etc. within DeFi provided by stablecoins. So it is still very important for crypto native communities. But I wouldn't say they are clashing, because what you would allocate to your Bitcoin, the role Bitcoin plays in your portfolio is vastly different to what stablecoin would be. Sometimes when Bitcoin price is volatile or people are unsure of the direction, yes, they might sell out of BTC to hold stablecoins just to have the capital on the side. But then when the market is back, they will likely to join the party again. So it's not one or the other. It is the same in traditional financial market as cash versus your like other bond or equity investment positions.
So to sum up the market outlook, we mentioned liquidity as a driver, the Fed's Federal Reserve monetary policy going into 2026 is a primary driver, and are there anything else? Is there anything else that you're following? What about this AI bubble that we haven't talked about? That some executives in the AI tech space have already admitted that they're in a bubble. Ray Dalio just went on CNBC earlier this week and said literally, yes, we are definitely in a bubble. Now, people can define this however they like, but how relevant is tech and the tech industry to the crypto space when it comes to liquidity and capital flows?
Yeah. What we've been saying, the Bitcoin price reactions to NVIDIA stock price has having very strong correlation. And what we saw, especially last week when NVIDIA had its earnings result, BTC reacted very quickly ahead of the equity market on this. And because the liquidity was so thin in the market, so it quickly bounced back, and then people used this as exit liquidity and left the market. So that's why we saw another dip after that initial pump. But at the same time, to crypto people, what we are thinking about AI bubbles is in a sense that if AI bubble does become a major catalyst of traditional finance market losing confidence, then no risk on asset would outperform, and BTC would be included as well in a sense. As much as we say this is digital gold, even gold was dropping at that point, right? And to the point that BTC, it is having its own debate when it comes to AI and computing, because there was a very, very focused debate about quantum computing and how that is going to destroy Bitcoin, and Bitcoin basically goes to zero. There was such a crazy debate on this point. But then later on, some of the core devs from BTC community came out to say, worry not about that risk, because there will be certain upgrades, etc., to prevent that from happening. So we have our own crypto native AI and computing bubble, the battle to fight as well. But to your point, it did give us a great opportunity. An opportunity for what? An opportunity for something to go into the market. And with that, I actually want to mention one thing. I forgot to say this at the beginning, which is something called CMC20. And we can talk a little bit about that as well, because the AI bubble and the fear of busting that bubble created such a great entry point, and that was the launch date of CMC20 token. So yeah.
Well, yeah, let's talk about CMC20 in a bit. So you've got CoinMarketCap launches CMC20 index tokens compete with multi-coin ETFs. What's an index token?
Yeah, so it is essentially tokenized tradable crypto index. It is backed onto the top 20 largest cryptocurrencies on CMC. It is excluding stablecoins, excluding wrapped tokens like wrapped ETH, etc., and tokens with limited tradability. So it is similar to the S&P 500 equivalent. It is a benchmark that measures against the market, and now in a single DeFi-enabled tradable form. Market cap weighted monthly.
I remember in 2017, I was thinking to myself, I could use something like this. Why did it take the market so long? Or I guess, why did this product take so long to launch? I'm not calling out CoinMarketCap. I'm sure other people have worked on it, but yeah. Go ahead.
Yeah, there are challenges to that, because if you look at ETFs, how S&P 500 ETFs is structured, you have the index, then you have the desk of authorized participant market makers to go and buy those stocks. And then they give the basket of stocks to the ETF issuer. And when investors give, let's say, $1,000 to BlackRock, and then they buy the equivalent unit of ETF. That's how it works. But when it comes to tokenization, we cannot have that middleman. It has to be done on the DeFi smart contract, because code is law, and we do not want to give money to someone in the middle, and then they give us a token that is like, they say that they use the money to buy the token, but how can I verify? Again, when it comes to this, it's all about transparency. So CMC partnered with a protocol called Reserve. So when user gives $100 to buy CMC 20, the DeFi protocol would use that money to buy the 20 underlying tokens based on the index on BNB chain, and then mint a CMC 20 in return. All this transaction is done via the smart contract. It's trackable online. There's no middleman there, and it's fully transparent. So you can see that this is why it took us so long to build this thing. There are a few concerns here, but also most importantly, we have not seen an index in the market that covers all of the top 20. There are a few other sort of similar indices out there, but majority of them are missing one or if not multiple K players. And to your point, David, I think it's such a great tool to have when you don't know what to invest and you don't want to like miss out on the trend. You don't want to constantly look at crypto every day. What is pumping? When should I sell? What should I buy next? Like, just buy the index, relax. And this is why I think for the past few days, it's been such a great tool, to be honest.
Yeah, so this is your CoinMarketCap 20 index DTF. This is just the index. So do you rebalance regularly? Well, would you?
It is monthly rebalancing. S&P 500 is quarterly. So if you can view the index, it's live and transparent on CMC right now. If you go onto dashboard, and in the second column, it has CMC 20 index. And then you can see what is in the index at the moment. So market cap weighted monthly rebalancing. So every month we take a cut on which 20 names makes it into the index. And because it's market cap weighted, so it's just like refreshes every second.
But isn't that just mostly Bitcoin then still, if it's market cap weighted?
Right now it's 67% BTC. Ether is at 13.7%, but we intended to do it this way. We did not want to cap it. Why? Because when the altcoin season comes in, this index has demonstrated backtesting result of outperforming BTC significantly. And the reason for that is when we constructed the index, we really did this with tradability in mind. So we did the top 100. There's a CMC 100 index as well, but there is not a tradable token. So when we wanted to do a tradable index, we tested the top 10, top 20, top 50, and we landed on the top 20 for the best exposure to what is trending versus like the largest cap, the safest bet. So this index is really created with the weight in mind that whatever narrative is trending, you would capture that growth immediately in the index.
I want to pivot now before we end the conversation on something that people don't discuss as much. This is Vitalik Buterin, Ethereum co-founder, making some statements about quantum computing at a recent event. Elliptic curves are going to die, he said. Pointing to predictions that quantum computing could potentially break Ethereum before 2028. On November 13th, Scott Aronson, a quantum computing professor at the University of Texas at Austin, stated that fault-tolerant quantum computers could threaten Bitcoin's elliptic curve cryptography by 2028. I now think it's a live possibility that we'll have a fault-tolerant quantum computing running Shor's algorithms before the next US presidential election. ChatGPT warns quantum computing poses a real and time-sensitive challenge for blockchains built on elliptic curve cryptography. We all know that if ChatGPT says it, it must be correct. There's no other option. I'm kidding. That was a joke. So, what's your human evaluation?
Yeah, I love that, by the way, because this is like one of the lazy way for people to like debate on a big topic like this. I'll just ask Chat and see what Chat says.
Yeah, it's like,
by the way,
you can judge. Yeah.
You can ask CMC AI now. We also have this, and we can
really?
do a way more native, like crypto native analysis for you. So to answer your question, what do I think about this?
You know what? Let's do it now. Okay, I'm gonna please answer, and then as you're answering, I'm gonna ask the AI, see if they agree with you. Okay.
Yeah. So my answer here is we gotta look at the big picture, which is Bitcoin will evolve. It will not die. So there are a few threat types, private key attack, the ECDSA that you mentioned, elliptic, what's the full name?
Cryptography,
yeah. So that is one of the risk levels, but it's more of a long-term potential risks. And this is solvable via PQC upgrade that Bitcoin core dev community has mentioned. Number two is the mining hash attack, the SHA-256. That's a minimal theoretical risk there, and there's not really any significant impact. And there's also consensus disruption that is very low, to be honest. People say that an upgrade of the BTC network can solve that. So all of this, we're looking at realistically timeline 15 plus years. I know Vitalik quoted by 2028. Honestly speaking, to do something like this for BTC is not going to happen by 2028. Plus, the community are now really working closely on the upgrade already. So by that point, when quantum computing comes around, there are so many other things that would have way more risks, way more important to solve than just hacking BTC, to be honest.
Sure, and certainly I don't think the market is pricing this in right now. I mean, no one's talking about this risk as being the main reason people are selling off. And if quantum computing is the main risk, it's going to go near zero, not 20% correction, right? So
all assets will be at zero by that point, not just BTC.
Yeah, exactly. Okay, Alice, well, great thoughts. Thank you very much for joining the program. And tell us where we can find more about your work and follow you and the work that you do. Yeah,
sure. So on CoinMarketCap, you can follow me on CMC community under the name of Alice Crypto. And I have my weekly podcast there as well, where I talk about the market. On Twitter, you can find me at AliceCrypto3. And on LinkedIn, I'm also just search Alice CMC. You'll find me.
Okay. All right. We'll put the links down below. So make sure to follow Alice and CoinMarketCap there. Thank you very much, Alice. Good to meet you, and we'll have you back again soon. Take care for now.
Thank you very much.
Thank you for watching. Don't forget to like and subscribe.